I'm Dan Roberts, the editor-in-chief of Front Office Sports, and you're watching Taking Stock.
The Dow Jones Industrial Average was created May 26, 1896, and although it looks a lot different today from those original 12 industrial stocks, never before in the 129-year history of the Dow has it ever finished above 47,000. That is, of course, until today. Welcome to the show, one and all that you're watching Taking Stock. I'm your host, JD Durkin, just moments away from the ringing of the one, the only, the truly iconic closing bell. We do it every afternoon here on the floor of the New York Stock Exchange. Today, the team from Citibank, ticker symbol C, set to do the honors on a history-making day here on Wall Street, as we are expecting several of the major market indexes to finish not just in positive territory, but in record-setting territory. The S&P 500 up 0.8%. The Dow, as we just alluded to, set to close well above 47,000. Comparable story for the NYSE Composite Index. And how about the small caps? We love to see the Russell 2000 getting in on the fun. The Russell's up 1.2%. That CPI print we finally got from the government today showing inflation softer than expected, maybe not quite baked in terms of market participants on the day. Tech very much catching a bid. Volatility in retreat once again, with the VIX sliding down to 16 and change, its lowest level since last Friday. Time now for the team from Citibank, here to do the honors, celebrating Disability and Neurodiversity Awareness Month. The team from Citi here now to do the honors. And there you have it with the three gavels. The trading week comes to a close. All-time highs for several of the major market indexes. It is a similar story today for the tail of the tape. The S&P 500, the Dow, the NYSE Composite Index, the small caps, as well as the NASDAQ Composite. In terms of the top performing sectors out of the S&P 500 on this trading Friday, tech, utilities, and financials all catching a bid to the upside, while the laggards include energy and staples. The Dow 30 strongest performers include IBM, having a monster day. We'll talk a lot more about IBM later on in the broadcast, but for now, let's bring in my man, Zach Pandl. He is the head of research at Grayscale Investments. Welcome to the NYSE and welcome to the show. It's great to have you today.
It is my pleasure to be here. Thank you.
More broadly, in terms of taking a step back, into the minutia of the moment to moment, we're at all-time highs here today. What are you seeing more broadly across the performance for the major market indexes as of late?
Well, it's relief on inflation, really the story to the day. 3% inflation, that's what counts as low inflation in our world today. So we're probably going to get another Fed rate cut coming up next meeting, and probably the one after that. The market likes that. More Fed easing into the context of a warm economy. That's enough to get us some relief. Beyond that, tariffs, government shutdown, these are the next big macro issues to keep an eye on.
Yeah, what do you make of the fact that Jerome Powell and his colleagues at the Fed, they've been overemphasizing more and more the other side of their dual mandate? It's not just inflation concerns. We know the goal has always been 2%. We're still kind of stuck at 3%, but now it's the potential deterioration of the labor market conditions. What are you watching for out of Fed speak moving forward?
Well, there's a huge puzzle here with the labor market. We see relatively soft jobs growth, but we don't really know. Is it a weak economy, or is it just slower immigration and AI disruptions, things like this? So the Fed has a puzzle on their hands. Right now, I think they've committed to cutting rates, given what they're seeing on inflation and jobs. Good enough for now is, I guess, what we see in the data. If they need to cut faster, if they need to pause, that'll be determined when the government reopens and we start getting some more jobs data again.
Yeah, well, and I wonder what the path forward looks like for the Fed, a data-dependent Fed that doesn't have a lot of data to go off of. Maybe you make the argument ADP, private payrolls, maybe play into their calculus, at least for December. We got an FOMC meeting coming up this Wednesday, one more in December. What are you looking for out of those two meetings?
It is always sort of driving in the dark when you're making policy under uncertainty, and it's even darker. Maybe your headlights are a little dim or something like that. So some tough decisions for the Fed. I think they're going to err on the side of easing, err on the side of caution, which means cutting rates this coming Wednesday, again later in the year. That's going to keep supporting markets that I cover, crypto assets, as well as the broad indexes would be my expectation.
Yes, let me ask you a little bit more about those crypto majors. The big storyline, at least the last several weeks, of course, Bitcoin coming off those all-time highs at 125, the huge surge in ETH. We got the shutdown concerns, you got China trade concerns as well. How does that impact the crypto majors from your lens, Zach?
Yeah. Two big trends powering the crypto market this year. One is macro demand for scarce assets, whether it's gold, silver, physical assets, or things like Bitcoin, a scarce digital asset. So that macro demand still very much there. And then regulatory tailwinds. President Trump came into office with a mandate from voters to bring regulatory clarity to crypto. He's been delivering on that. We think we'll see more of that later this year with the Senate working on more crypto legislation on a bipartisan basis. So in my view, of course, there's always ups and downs, but to me, the big two fundamental drivers of the asset class are very much still in place. I have a very positive outlook for crypto into the end of the year.
It's good to know there are at least a few topics you can still use the word bipartisanship to
Absolutely.
describe. There aren't a lot of them right now
right.
at Capitol Hill, but crypto
is
regulations
one of those
seem to
things.
be one of those.
Absolutely.
How does Q4 seasonality play a role for crypto? It's traditionally a very strong part of the year. Is that kind of your base case, your expectation for the rest of the quarter?
That is my base case. I think a more macro thing than a crypto thing in this case. Crypto is in good shape for these reasons. Regulatory clarity, a lot of the flows into ETFs and things like that, but it's a macro question. Does the Fed keep cutting? Does the trade war get worse or does it get better? Does the government reopen? I think all that stuff is going to cut in a positive direction for markets, including crypto, and we end the year higher than we are today, but it's going to come down to these macro questions, so TBD, but that would be my take.
Yeah, today is day 24 of the ongoing government shutdown. If we're at this for another couple weeks, it will officially be the longest government shutdown we've ever had. Hopefully a little bit of bipartisanship can rule the day at some point down on Capitol Hill to get the lights back on for the federal government. Wouldn't that be nice?
You would hope.
Zach Pandal of Grayscale kicking off the broadcast with us. Thanks a lot for being here, my man. It's great to have you.
My great pleasure. Thank you.
Josh will take your microphone. Bobby, you and I are going to go for a walk. We'll take a look at a few NYSE notables, but first, we bring you the latest you need to know on a very closely watched event contract over on Polymarket, and it pertains to a huge potential earnings beat out of one of the mega cap companies we get on Wednesday afternoon. Will Alphabet beat on quarterly earnings? Generally accepted accounting practices of EPS greater than 229. That's the contract of binary bets. The odds makers right now leaning a bit bullish, 74% chance they say Google does beat. When is the last time Google didn't beat? You got to go all the way back to Q4 of 2022. That's when interest rates first started going higher, and Google had missed earnings per share estimates 4 quarters in a row back in 2022. We will see what they have in store when they report Wednesday after the close. Bobby, time now for 2 NYSE notables, and my goodness, are they ever. How about Ford Motor, the strongest performing name in the S&P 500 today, reaching a fresh 52-week high there. You see shares up 12% on the day after reporting a huge beat on top and bottom line. Analysts from Wells Fargo and Piper Sandler raising their price targets. Ford up 40% now. After the close today, they're up 40% from the start of the year. Bobby, finally, let's take a look here at shares of IBM, up almost 8%, the 5th best performer in the S&P 500 today, reaching some fresh all-time highs. This is a stock that first listed here at the NYSE under its original name all the way back in November of 1915. Now reaching fresh all-time highs, the largest gain the stock has seen since January 30th, the best performing name in the Dow here on Wall Street today. FinTech TV's very own Vince Molinari caught up recently with King Lau of Publia at Hub 71 Impact in Abu Dhabi to discuss how the company is using artificial intelligence to revolutionize business data. Take a look.
I'm joined today by King Lai, who is the founder of Pubio. King, tell us about Pubio. I'd love to know about the mission.
Certainly, Pubio actually is a global business data hub. Think about it's an AI alternative to LinkedIn. Because a lot of companies like fintech, they want to target e-commerce, or AI company, they want to expand to overseas, right? But when they think of a business data, it is hard to find. Think about when you want to find a restaurant, you can just Google search and think oh, I want to have a Chinese food. Then everything is all right. But if you want to find a list of e-commerce, they're doing fashion brand, oh, that's tough. That's why in Pubio, what we are doing, actually, we want to aggregate the data across geographic, online, offline, within a single platform. So what we can do is as simple as searching data on Google.
So I love the way you bring it very basic for me back to food and restaurants. So this seems to be aggregating the data to make it more seamless to search and find across perhaps a global perspective. Would that be summing it up properly?
Yes, actually, like the main problem right now is finding accurate business information is tough and time consuming. When we think about like doing some business connections, we may consider LinkedIn or PitchBook. However, it misses 70% opportunity worldwide, such as when we target the industry like e-commerce or F&B, they are not on LinkedIn. Or if we target the locations like Vietnam or Korea, they have their own local dictionary. So that's why, of course, along with some challenge, including like limited filtering, multilingual and incorrect informations. So many people like sales or marketing team, they do a lot of search engine or web scraper, but waste countless of time every day. So that's why when they come with us, they can solve this problem like seamlessly.
So that data fragmentation seems to go away with your platform, and there an inherent time savings, which is money.
Yes, certainly. I would say a lot of type of business, no matter they are a brand, for example, like a sales, they want to have a list of like a target prospect, or marketing team, they want to understand about the addressable market size, or even like a multinational company, if they want to enter another market, such as a lot of multinational company, they want to land in the UAE, right? But before they like operate here, they want to know, oh, how big the market it is. So they need to have a reliable business data. So they will come with us and understand, okay, oh, the market is huge. Then it's give them a better decisions. And once they land with in the country or in the locations, then they can use the same data to do the prospecting to do a better decisions. So I would say as long as like AI is the trend of AI is keep like growing, a lot of people actually they will ask for some simple questions like help me to do a calculations. But I can foresee in the future, oh, if the sales or marketing team, I want to target certain country, can you give me some recommendations? And we will be the data providers and contribute the data to the AI.
King, congratulations on the work, and thank you for joining us today.
Thank you so much.
A pleasure. Thank you.
Welcome back to the broad watching Taking Stock live from the trading floor of the one and only New York Stock Exchange. Time now for the latest headlines you need to know in the world of fintech, crypto, and AI. First up, all the crypto majors, Bitcoin, Ethereum, Solana, you name it, they're holding steady in positive territory today after what has been a turbulent week of trading. Next up, Zelle, the popular U.S. payments network that moved over $1 trillion last year. Well, they're now exploring stablecoin tech to power international transfers and expand the company's global reach. And finally, on this Friday, JP Morgan taking another step into digital assets, now planning to allow institutional clients to use Bitcoin and Ethereum as loan collateral by year's end. What a storyline. The institutionalization of these crypto majors, once cast off to the cornfields, no longer. Joining me now, Austin Federa is the co-founder of DoubleZero, a man who knows a lot about the broader crypto and fintech space. Thanks for being here at the exchange and on the show. It's great to have you.
Yeah, thanks for having me.
Let's start first and foremost with an introduction to DoubleZero for anyone watching the show might be a bit unfamiliar. And talk to me about some of the ways you and your colleagues are trying to level the playing field between TradFi and DeFi.
Yeah, so DoubleZero is an effort to rebuild the internet from the ground up using the same types of technologies that Wall Street trading firms and other large technology companies have been using for decades. It's building a new internet with dedicated fiber connectivity, the same way that happened in traditional finance 25 years ago. Crypto is finally fast enough to make use of that same type of technology and use it to level the playing field.
What do you see as being the biggest opportunities of that challenge, and also maybe some of the biggest challenges, the biggest headwinds of taking on a task?
Yeah, you know, we may not think of financial markets as quite predictable, but from a network infrastructure standpoint, they're incredibly predictable. When a market maker goes to trade, they always know the execution time it'll take. That's not true in crypto. There's a huge amount of variability because the public internet was never built for these type of high performance systems. And so if we can build these systems and bring them to blockchain markets, the structure will resemble things much more similar to traditional markets in their ability to have dependable execution times and much more predictable systems for traders, which is really what you need if you want to bring the Web3 world of decentralized finance and the traditional world of centralized finance closer together.
Yeah, when you talk about executable times, I mean, this is one of the things I love about doing the show on the trading floor of the New York Stock Exchange, because where better encapsulates the history of lowering latency for trades now well over 100 years in a building like this, going back to 1903. What does Wall Street speed look like for you and your company, where every, not just second, every millisecond matters on these trades?
Truly, yeah. I mean, nanoseconds are what matter when you're really talking about the high frequency trading firms on Wall Street. Blockchain today, 400 milliseconds is still fast. So we have a huge delta between what you see in high frequency trading and what you see on blockchain. The thing to remember about blockchain, though, is it's run in thousands of computers all around the world. So it's, imagine the New York Stock Exchange moves from here to San Francisco to Amsterdam to Singapore to Tokyo every 1.6 seconds. And so there's this massive problem of traders trying to keep up and move their trades to wherever the block is being built at a given moment. It's truly a global market. And because of that, you need fast, dependable connectivity and fiber linking all these different markets together. And why not build that whole thing powered by blockchain and tokens?
Can you talk to me about this SEC no action letter? What does it mean, and how big of a deal is it for crypto? What are the basics people should know of this?
Yeah, so as you know, a no action letter is quite standard in the traditional finance world. It's when you go to the SEC and say, we'd like to do something, do you see any problems with it? Crypto has not been able to get no action letters for years and years. And so we applied for one governing the transactions that are basically payouts to the fiber network operators. And what the SEC said is they don't think those constitute securities transactions, which is maybe not a big deal for crypto native folks, but for a telecom or for a PE-owned telecom that is trying to engage with this space, they no longer need a securities lawyer to assess whether crypto is risky for them. The SEC has said these are functionally commodities transactions.
Yeah, we're about out of time. Very grateful for your time and perspective. Dude, I do a lot of great interviews, and my favorite ones are the ones where I'm actively listening and I'm learning. I learned so much in the last 5 minutes with you. Austin Federa, please come back anytime. Been a great privilege to have you on the show and here at the Exchange.
Thank you.
Enjoy your weekend, my man. Folks, those of you watching at home, do not go anywhere. Much more Taking Stock coming up after this, including the latest in startups, raises, and rounds, plus much more from Hub 71 Impact in Abu Dhabi. Don't go anywhere. More Taking Stock coming up after this. Welcome back to the show. You're watching Taking Stock. The New York Stock Exchange's very own curator of archives, Anna Mello, now explains how the history of the iconic NYSE parallels the history of the exchange itself. Take a look.
Although the New York Stock Exchange was founded in 1792, it took more than 70 years for the budding exchange to purchase property. The New York Stock Exchange opened the doors of its first permanent building in 1865, and we've been right here on the corner of Wall and Broad ever since. That structure was demolished to build our current home on 12 Broad Street, but a few pieces of the old stock exchange were preserved, including this glorious walnut wall clock. This clock was custom built for the New York Stock Exchange and made right here in the great city of New York. The mechanism was completed in 1865, and when the cabinetry was completed in 1867, it was ready for action. The clock came from the shop of William F. Ladd, whose signature is visible on the pendulum calibration plate. This regulator clock runs on a movement using a pendulum and gears, and was far more accurate than other contemporary styles of timepiece. Regulator clocks were initially used in astronomical observatories and clock shops, or anywhere that required immense precision. Most clocks of this era would easily become inaccurate due to heat and friction, but the New York Stock Exchange boardroom clock was built to minimize time drift and ensure that the NYSE's marketplace ran smoothly and accurately. Its innovative design utilizes a liquid-filled pendulum, which is better able to compensate for the changes in temperature. This clock was built for such precision because it was used to measure trading windows when the New York Stock Exchange operated as a call market. Securities were traded one at a time, in increments of 5 minutes each. The time of day didn't matter as much as which trading window one was in, hence the unusual choice of clock face. At the end of each trading window, the president of the exchange would bang a gavel to signify that the trading of a particular security is over, and the time has come to move on to the next one. That is why, even today, when the closing bell is rung at the New York Stock Exchange to close the markets, we still bang a gavel to signify the end of trading securities. Today, the companies that list their stock on the New York Stock Exchange are as diverse as they are numerous. Some of the bank, railroad, and utility companies that listed their securities in the 19th century are still listed with us today, and they are now joined by companies in such varied industries as aviation, outerwear, biotechnology, innerwear, data security, footwear, cloud computing, and maquillage, just to name a few. The clock was first installed on the old trading floor in 1867, but by 1871, the New York Stock Exchange had by necessity adopted a groundbreaking new market model. The second industrial revolution was picking up steam on the heels of the first, mechanizing the world and fundamentally changing the way we live our lives. The wealth and population of industrializing nations increased at a breakneck speed, and what fed this growing and globalizing world economy was capital. Inventors, entrepreneurs, and governments needed funds in order to realize their visions, and naturally turned to capital markets to raise said funds. One of the inventions of the technological revolution that inexorably changed the way that all securities exchanges operate was the stock ticker, invented by Edward Callahan the same year as the New York Stock Exchange clock was completed, 1867. Brokers, businessmen, and anybody else invested in financial markets now had access to continuously updated stock prices and could make decisions accordingly. As a result of these changes, more companies and governments listed their securities on the New York Stock Exchange, trading volume increased, and the quotation book grew from 30 securities up to 300. Under the call market model of trading securities in 5-minute increments, the New York Stock Exchange was facing the prospect of a 25-hour trading day. Thus, in 1871, only 4 years after this clock began its work, it became obsolete, as the New York Stock Exchange became a continuous marketplace for the first time. The New York Stock Exchange pioneered this market model, employing specialists operating as points of sale alongside brokers in an open outcry format. The specialist and broker market model was adopted by exchanges worldwide and continued to be industry standard for decades. But today, all but one has closed its trading floor. When this clock was being utilized, there were about 30 securities listed in the New York Stock Exchange quotation book. Today, the NYSE trades 8,000 securities, including over 2,300 listed domestic and international issuers and 70% of S&P 500 companies. Of course, far more has changed here at the New York Stock Exchange, and more broadly in our markets, than the number of listed companies. 150 years after the New York Stock Exchange first became a continuous marketplace, today we can look back over a century and a half of evolution that has ushered in countless technological innovations that have increased efficiency to an astronomical degree. In the 1800s, when the New York Stock Exchange operated as a call market, in 5 minutes, one loan security was traded, with no guarantee that even a single transaction would take place in that allotted time. Today, in the span of 5 minutes, our industry-leading technology is capable of processing over 1 billion messages. Each message is processed reliably at lightning-fast speeds in about 1/10,000th of the time it takes to blink your eye. Back in the 19th century, the amount of money that changed hands in the space of 5 minutes ranged from $0 to several hundred. Today, our peak notional exchanging hands in a 5-minute window is more than $150 billion, counting equities alone. Today, across our 5 equity and 2 options exchanges, we continue to see ever-increasing demand, resulting in 5-minute peaks of over 2 million individual trades where 3 billion shares traded hands across 18,000 different listed equity and option securities. Time is immutable. Time cannot be rejected or escaped, but it can certainly be measured. Nowhere is the measure of time more imperative than in a securities exchange. For 157 years, this clock has been diligently ticking away, keeping time in the home of the epicenter of global capital markets, the New York Stock Exchange.
Welcome back. I am Scarlett Sieber from Money 2020, and on this segment of Back of the Napkin Math, we got some napkins, we got some other things, and some other things. So we're out here with lots of cool stuff. You know, we are sitting here at the beautiful, iconic New York Stock Exchange. And one of the things that we're going to do here, I have a guest with me in Zach Pettit from Money 2020 as well. And one of the things that we're going to do is I'm going to take a celebrity at random.
Okay.
You might know him, you might not. It is a him in this case.
Okay.
And we're going to do a fun little what if, you know, on the Back of the Napkin Math. What if this celebrity was actually a company listed at the New York Stock Exchange? What would this celebrity's market cap and enterprise value be? That's the question for you.
Interesting. Okay.
So you've got 30 seconds to give me your thoughts.
Okay.
The celebrity is dun 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 Patrick Mahomes.
Okay.
30 seconds. Let's go. Market cap and enterprise value.
Okay. What's his net worth?
Net worth is 70 to 75 million.
70 to 75. Okay. That, for one, that feels low. But okay, so 70 to 75 million. Think about the brand of Patrick Mahomes. Like, there's a... Like
you know something about that brand?
When you're thinking about the multiple of it, like, one, he's returning capital on top of the cash. He has like 95% returns or something like that, because Kansas City happens to be a wealth management capital of the world, but we'll just breeze by that. I think 70 to 75, you include the brand, you think about Oakley, you think about State Farm, like he's he's the nice guy of the NFL. So I don't think he's going to trade it. Yeah, he's a family man, exactly. I don't think he's going to trade it like a 20 times multiple because he's far enough into his career. But you could give him at least a 10 times multiple.
I was quite intrigued with what you were saying, so I let you go over time. But okay, so what you're giving him 10 times? So you're saying what?
I would go value? 700 to 800 million, 750, something like that.
Okay, well with that, Patrick Mahomes out here at 750, not quite a Billy, but we getting up there. All right, if there's anyone that you would want to know about who we think their market cap would be, their enterprise value, then go ahead and leave in the comments below. That is all for this week. Until next time.
Welcome back to the broadcast here, one and all. Quick programming note, Monday, Tuesday, and Wednesday of next week, I will be live in the beautiful city of Las Vegas, Nevada on behalf of Money 2020, and we will be hosting the show live from Nevada each of those 3 days. And of course, it is a jam-packed week of expected earnings on Tuesday, UNH and PayPal Wednesday. Now we get to the good stuff. Meta, Microsoft, and Google set to report on Thursday, Amazon and Apple, and the energy giants on Friday. That's going to do it. Have a great weekend, and we will see you Monday. Woo!